So good day, dear investors. It's nice to join from Orion Securities headquarters again, despite this fact that it's midsummer has just passed. As we are joking, markets are not in holiday mood, still developing, and this week we have started placement of a new bond issue about which we want to talk and present to you exactly in this webinar. So today we are presenting KAITA Living public bond issue, which is subholding of one of the largest residential property developers here in Lithuania, and this specific KAITA Living subholding is consolidating rental property owned and managed by the group. And today with us we have representatives of KAITA Group and KAITA Living. So we have Jonas Kežys, who is one of the founders of KAITA Group and a board member as well. We also have Dalius Kaveckas, Group CFO and a board member, and we have Mantas Rimkus, finance director, finance manager of the group. And as always in our webinars, we encourage you to submit questions using the Q&A interface. Once we have finished with the let's call official part of the presentation, going through the slides, we will switch to Q&A session. So without wasting any additional time, I want to give a brief introduction about the offering we're having now. So the issuer, KAITA Living, is issuing a total 8 million euros bond program. So the total program size is up to 8 million euros. And the first tranche we are focusing now, it's a 2 million euro tranche, which in case of large demand could be upsized till the total amount of 8 million euros. The issuer is offering 11.5 annual coupon rate, which is paid out on a semi-annual basis, and the maturity of the bonds is 2 years. So comparing with what we have in the market, in the Baltic bond market as of today, I would say that it's in the middle, a bit of shorter maturity, because the average maturity we have in market is around 3 years, and recently we also had several issues with 4 years. This is not the first issue issued by the KAITA Living. KAITA Living has issued previously two bond issues in 2023 with a total size of 11 million. And in this placement, we are also offering investors of these previous privately placed issues to switch the bonds to the new ones. And actually, proceeds received from this bond offering will be used to partially refinance existing bonds which are maturing. One bond is maturing in August and another bond is maturing in October. Regarding the security, the bonds are secured with a primary pledge of two subsidiaries. So WAP plėtojimo projektai and Naujamiesčio NT. These are actually the subsidiaries which are owning co-living assets of co-living properties here in Vilnius. The company will talk more about these specific properties, which are all rented out, have really high occupancy, higher than 95%. So the shares of these companies are being pledged. It's not a direct property pledge, but a pledge of the shares. Also, we have additional covenants which are focused on ensuring that there is a substantial and sufficient value, net value of these shares which are being pledged to the investors. In addition to that, also receivables from the shareholders are also pledged for the bonds. Shortly about KAITA Living. As I said, the whole KAITA Group is a big developer here in Lithuania, and activities covering not only Lithuania but foreign markets as well. But KAITA Living specifically is consolidating co-living and managed apartments portfolio, which at the moment consists of four separate properties, all situated in Vilnius in central areas. And the business model of all these properties is well, rental business model. Uh, the total asset value of these properties is 58 million euros. Uh, and actually, if you look at the balance sheet, you would see that together with subordinated loans, which are subordinated to the bonds, due to significant property value, the total equity of the issuer is quite significant in excess of 23 million euros, and the equity ratio is above 30%. So I would say that this is one of the points showing the risk limitation and ability of the issuer to take additional debt with bond issue. A term sheet, apart from what I have already mentioned, I would like focus maybe more on the financial covenants. We have a set of it. So part of it is concentrated towards limiting the debt exposure of the group as well of the pledged subsidiaries. So we have that for the pledged subsidiaries, loan to value cannot be higher than 70% at all times. Also, we have an equity ratio covenant on a consolidated basis higher than 30%. For the pledged subsidiaries, it's more than 20%. And I would say one of the key covenants is bonds to value of pledged shares ratio. Um, we want to make sure that at all times there is a sufficient value in pledged shares, and we calculate the value of shares as a market value of properties, which has to be appraised every year. And when we have this market value of owned properties by the subsidiaries, we subtract all the liabilities, add cash, and get the net equity value. And the requirement is that at all times, this loan to equity, bond to equity value is not higher than 55%, meaning that at all times, value of shares is at least 1.8 times higher than the outstanding amount of bonds. And last, minimum liquidity requirement, well, it states that at all times, the issuer should have sufficient cash in its bank account to cover the upcoming semi-annual coupon payment. Also, since the source of redemption, main source of redemption is a sale of the properties, so either through asset sale or equity sale in these subsidiaries, we have a rather higher flexibility in terms of early redemption. Issuer is provided a call option, according to which the issuer can redeem the bonds during the first 12 months, paying additional 2% premium from nominal amount. If it's redeemed after 12 months, 1% premium, and if it's redeemed six months to maturity, during that period, it can be redeemed without any premium. Also, it can be redeemed partial as well, but redemption cannot be smaller than 1 million euros. Why we have such a requirement in place? As I said, if the properties are being divested partially, selling not, it's possible that not all property is sold, but part of the apartments is sold. The issuer is obliged to deposit part of the sale proceeds to dedicated account in which the amounts are being accrued, and when we have 1 million in that account, automatically an early redemption is being executed, ensuring that if the issuer is exiting properties, it is also amortizing the bonds in parallel. So use of proceeds, I have already mentioned, redemption of the existing bonds. The bond which is maturing in 1st of August, the size is 4.5 million. It's important to note that for the redemption, 3 million is already secured as a private loan from one of the financial partners of the group. So from the issue which is being placed now, 1.5 million would be used to redeem the bonds maturing in August, and the remaining amount, 6.5 million from the bond proceeds would be used to redeem issue which is maturing in October this year. Key dates. The offering has started this Monday. It is spanning till 11th of June, so we have three weeks of subscription period. Uh, we will announce allocation on Monday following end of subscription period, and first date of validity of the bonds is 15th of July, when we have a semi-annual coupons, and finally redemption of the bonds is in summer of 2027, of course. This is the case if no early redemption option is executed by the issuer. And finally, before giving floor to representatives of KAITA, key highlights, what we see for this bond issue. So firstly, I would say that focus of the group, of the issuer, as well as of the properties on the co-living real estate business segment, which is getting popularity in Lithuania and in the whole European and maybe on a global scale, I would say also. And what we will see in commercial metrics, these properties are showing really substantial occupancy rates. They are rented not only by students but young professionals. So really a target audience, well placed and well paying customers. I guess the main focus that all these properties are operating. There is no any development risk which we have in other bond offering, which we saw in this year. So this is fully operational real estate portfolio behind. Secondary, as I mentioned, we have a quite extensive covenant structure, ensuring both substantial equity, substantial collateral value, as well as managed disposal process, during which if the properties are being sold, bonds have to be amortized in parallel. Fairly, of course, the real estate. The issue is secured not by the property, but by the shares of companies owning property. But as I mentioned, all the property is fully rented out, high occupancy rates, and there is no any development risk. The last part of units in one of the largest co-living properties were fully erected, fully repaired last year. So it has reached full potential and is fully operating. And finally, of course, this is an issue by a KAITA Group, part subsidiary company of KAITA Group, which has extensive experience in developing residential properties here in Lithuania. And also what we saw in May, actually, the residential flat sales, the company was a leader in Vilnius in terms of volumes achieved. So these are key points. And now I'm giving floor to Jonas, who will continue presenting the group and the issuer. Yeah, it's not working. Okay.
So, good afternoon. It's nice to see that not only local Lithuanian players and investors are interested in our company, in our products, but also our neighbors. So let's go straight to our group. And today we will explain a bit more about our business, about our products, and we'll try to answer all your questions in the end of the presentation. So, starting with KAITA Group structure, we have several main niche we are working with. So the first and today the most important because of this issue is KAITA Living, and KAITA Living is responsible for already built, erected buildings that are being operated by our company, and well, that's the rent business of co-working and service apartments. The next and important uh, business niches, KAITA International, because before having a portfolio of rent units, you need to find potential plots, potential buildings, and then implement all the projects. So KAITA International is responsible for finding, acquiring, implementing the projects, which later are being transferred to KAITA Living and to their team. And also, we have KAITA Development, which is responsible for development projects in Vilnius. And those projects usually are for sale. So let's say we have two ways of business. So units for sale and units for sale. So we began with KAITA Development, and then the business grows, and well, now we have a group of several ways of the business. And talking about the main key figures, it's important to say that at this moment we have already implemented, or the projects are being under development of total of 26 projects, and almost 1,000 units are sold for the clients, and almost 1,000 units are built to rent, and they are either developed or are in the progress. So that means that the company is capable of not only finding but developing quite a huge problems, and deal with well, quite big numbers in this area. And talking about the main experience and our company capabilities. So, well, I have to mention that we have a really strong team which is working with sourcing, scouting potential projects in Lithuania, in foreign countries. We have a team which is responsible for implementing our projects, and usually we do construction management in-house. That means that we have our project managers, and well, we are buying separate parts of construction construction contracts. We usually do not have general contractors. So I'm saying that because, well, that means that we have quite a strong team which is working with almost all parts of development phases. And well, it's really important that in terms of sales, we are among top 10 developers in Lithuania. And as it was mentioned, they on May, our company was not on the top list. We were first in Lithuania regarding the sales of units in new construction. So it's really good achievement, which means that, well, it's being capable of finding and implementing projects, it's okay, but well, you need to manage how to end all those phases successfully. And talking about our co-living and service apartment business, currently we are the biggest owner and operator in Vilnius. And well, that that also means that mm, well, we are responsible for the biggest portfolio in 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 Lithuania, and well, we are looking for more and more opportunities. Going deeper in subsidiaries that we are talking today, which shares will be used as a collateral. So we need to talk about Naujamiesčio NT, Plėtojimo Projektai, two companies. And the first company is owning 273 units of service apartments and 144 units of co-working chairs. So that means that it's a mixed use project in Naujamiestis, in central, say, quite central location in the Vilnius. And at the moment, the occupancy rate is about 95%. You can see that all projects are about the same occupancy rate, 95. When we're talking about Plėtojimo Projektai, it's 96%. So we are targeting high occupancy rates in all our projects. At this stage, the property value, as you can see, it's 32.5 million euros in Naujamiesčio NT and 9.5 million euros in Plėtojimo Projektai. And both projects, both projects are, well, we can say, really sustainable, and we do everything we can that, well, we reach the goals of this sustainability. And the best proof of that is that in Naujamiesčio NT we have Green in Use Excellent certificate, which is quite a high achievement for such type of property in Lithuania. And talking about Plėtojimo Projektai, we are reaching for this Green in Use rating, and well, we are expecting to receive it this year. So we have two projects. What are the differences between them? If we talk about Naujamiesčio NT, we have Houston apartments, so that means that this project is more closer to BTR projects, for rent projects. Yes, the tenants are, let's say, more usual than you can find in rental projects. And when we are talking about Plėtojimo Projektai, Houston co-living Smolensko, well, you can see that it's a co-living project. So that means that we are mostly attracting business and well, young professionals, as well as foreign and local students. Most of them are working, so we can say that, well, most of the target audience is more or less young professionals. And maybe it's the target groups are the main differences in those projects, and that means that well, we need a bit different premises for those target groups. So in Naujamiesčio NT we have around 29 square meters average unit. When we are talking about Plėtojimo Projektai, it's about 19 square meters. So we will show how it differs a bit later.
Maybe you could also comment regarding property value per square meter. I guess you can compare it to residential properties in that area. So is it average, higher, lower? with 3,400, for example, for Naujamiesčio.
So if we let's say see 3,400 euros per square meter, and we have a valuation for separate units for this project, so it will be around 3,800, 900 euros. So it's, I think, a good example that in that area, separate units are even higher in value and they are more expensive, let's say, then we can see the valuation here. So it's looking from investor side, it looks quite well. I could say quite safe because if there is possibility, for example, with Naujamiesčio and there to exit with separate blocks of the building, because building has 3 blocks, A, B, C, and in those blocks, all the units are also separate. So that means that, well, you can do in some cases that means that the value of the units are way higher.
Okay.
When we are talking about plėtojimo projektai on the next slides, you will see maybe why the property value is 9.5, and I could say, well, after this year, the value shall be way higher, and we will see why. Yeah, so when we see the occupancy rates at first at Naujamiesčio NT, we can see that last year and this year the occupancy rate was, well, quite similar. This year it's better, and well, this year we have all the units intact because last year we finished 19 left units in Naujamiesčio NT, and that means that we have more units this year. So when we are talking about occupancy rates, it's quite high in Naujamiesčio NT. When we are seeing plėtojimo projektai, well, we can see that this year the average is around 96%. These months it's about even 98%. Last year we can see well, a sharp deep hole when we are seeing the occupancy rate, and the reason is quite simple. On the same plot, KAITA Group is finishing new construction apartments, and that means that you can see the impact. Last year, you can see the impact of ongoing construction on the site, and well, we can see that in the last term of the year, when the active construction phase ended, occupancy rates go up, and well, they are continuing till now. So that means that after this year, well, our cash flows will be better, we will get more revenues, and the results will be even better. And well, it's not only one reason why the results are going better, because of our professional team and our deep understanding in this sector. Well, we are doing better occupancy rates each year. We are working with the prices, and definitely we are doing our best in making the projects well, more efficient, working in more efficient way, in reducing the prices and tendering better, doing everything better. So that's why we see, well, in both projects real potential of higher values in this year and next year after. Yeah, so some statistics. So maybe shortly, you can see that both projects have around 10,000 square meters of co-living apartments area. Naujamiesčio and there's as well has co-working area of more than 700 square meters. And well, maybe that's the main information. Well, you can see parking spaces. We have around 100 parking spaces in Naujamiesčio, and that's quite normal because we have 273 units and co-working of 144 units. And well, this project, as I mentioned, is let's say quite close to uh, um, regular residential rental project. And in those projects, well, people usually needs parking spaces because the flats, the apartments are bigger. And when we are talking about co-living in Smolensk streets, you can see that there are no parking spaces. We will have some spaces when the construction phase will end. We will have around 14 spaces, but well, they are not we don't need many parking spaces in the project because most of the tenants are using well, they are not having their own cars and using the perfect infrastructure we have close to us. Yeah, and when we are talking about perfect infrastructure and locations, so in Vilnius and also in other cities that we are scouting for potential projects and already implemented some projects, well, we are usually uh, looking for either very central places or places in which the infrastructure is really good and you can reach the central district, the old town in 10 to 15 minutes, sometimes on foot, sometimes by bike or any other possible transport. So what I need to mention, Naujamies, this is, well, I suppose one of the fastest growing district in Vilnius, and is really popular among young professional, among young people, because uh, well, everything is so close. You have really perfect infrastructure. There are many business districts with local and international business stars like Tesonet, Vinted, and so on. So all those talents that are coming to work to different business districts. There are many in this district. Well, they are usually our clients, and well, we are able to attract them, and we see the opportunity of even more potential business districts in Naujamiestis. So, well, we believe that from strategic point, it was already already successful when we decided to focus on this part of the city. Yeah, so you can see some pictures of the projects, and well, as you can see, we are well really investing much in finding the best ways of using old buildings to be really attractive for our tenants, to that they need to be convenient, they need to be aesthetic. So we invest in finding the best solution. And you can see some pictures from Smolensk 10 service apartments. So you can see that we have lofts, we have studios, we have everything in the rooms from washing machines and all the other small gadgets that well, are needed for the tenants. We have also some common spaces which are not so big as you will see in the co-living projects. And when we are talking about co-living projects, well, it's really important that we are not selling or renting the square meters, but well, we are helping people in finding communities. Well, they want to be. We help people in finding optimal solution for they stay as well. Usually in co-living projects, the stay is a bit shortened than in regular rent. So as you can see, rooms are a bit smaller, but you can find everything you need in the common space, starting from saunas, cinemas, playgrounds, and making well dinners with the whole company. Yeah, you can see some pictures of other project which is not involved in this issue. So talking about updates since last bond issues. So as I mentioned before, in Naujamiesčio NT service apartment projects, we reached BREEAM in use excellent. We completed the last units last year, last 19 units, and now it's the full house at the moment. We divided buildings and units into separate ones, and we can see that well, the increase in value is about 23%. We have increase in rental income and reduction in bank debt around 3%. So you can see that the asset value in the individual unit, it's around 36.5 million euros. And we are expecting it to grow with the professional team, with all the efforts that we are doing. As I mentioned, not only making the occupancy rate better or gaining more incomes, but also making more project running more effectively because of the know-how and of the scale that we have at the moment. The scale really helps for us because, well, when you have 3 projects, it's one talk. When we have, well, 6 projects in different countries, it's way easier to do. So, ending with that, LTV, it's 44%. And when we see plėtojimo projektai, last year, around 13 apartments were also fully furnished, and that means that the increase of property in value is also higher. It's around 9.5 million euros, and we have a 6% decrease in bank debt. LTV percentage is 59%. And you also can see that the works of environmental works were done last year. It was beginning of that started last year, and it finished this year, and it's tied with the project of new apartments that I already mentioned. Yeah, and when we are talking about affiliated companies of the issue, it's crucial to mention KAITA International, which, as I mentioned, is responsible for finding potential projects and then implementing them. So now we are working in markets like Lithuania, Latvia, Poland, Czech Republic, Sweden, and UK. We are looking in some of them, we are looking for the projects, and some of them you can see we already have some projects. So in Czech Republic, in Prague, we already finished the project of 107 units almost 2 years ago. And well, we have really good occupancy rates, and it's really successful start of our international expansion. And next month we are planning to finish construction phase of new project in Riga in Latvia, and we are already working with signing contracts with our potential tenants. And we are in let's say in the middle of the project, a huge forest project, not maybe in size of units, but for it's huge because of the market we entered. So we entering London, and at this stage we have some demolition works on sites. We are working with designs and tendering contractors. So it will be also a huge step for the company to operate not only in Central Europe or Baltics, but also in one of the most active co-living markets in Europe. So after the projects are being done, they are going to KAITA Living team, and then it's being operated by KAITA Living operational team. The next part of the company, which I already mentioned, is KAITA Development. And KAITA Development is focusing on new construction sites in Vilnius. And as you can see, well, already we have already developed 20 projects in Vilnius, and in the pictures you can see 4 projects that are in progress. So starting with let's say the first steps. So off Namai, it's also a project in Naujamiestis, in really nice place, close to business districts and well, let's say it's really trendy place for young people. So we are in the very beginning of construction phase in this project. In the next picture, we can see Newton project, which will be the highest building for now for our company. We are at the moment on the 12th floor of this building in construction phase. And upper we can see Moods and Hivo projects. They are in final stages of construction phase. And when we are talking about Hivo, it's well really small environmental and inside works left, and it will be finished project. As I mentioned, this project is related to co-living, Smolensk co-living. They are on the same plot. Yeah, and what is important to mention one more time, maybe uh, in May, KAITA Group led the Vilnius primary housing market with 52 apartments sold. So that means that all those projects well are in good hands, and well, we are doing our best not only to finance, construct, but also to implement till the end. Yeah. And about KAITA Group structure, maybe my colleague Darius will say a word.
Uh, I suppose mentioned earlier, the focus there was in the first slide on kind of the business focus, just looking at the structure as it was presented here. It's more the picture how it is legally organized. Still, the business element is very important here because we are focusing on a couple of kind of business lines, which is one build to rent business, another is build to sell. Build to sell is where the whole activity started, and the KAITA Development company is the start of the company history and life as such. And later on, the market realities have shown that there is a demand for co-living, for build-to-rent services in the market, and that's why KAITA Living has been set up, and the structure has been developed in a way so that we could be focusing on conversion of properties in Vilnius focusing on rental service as such. As the life moved on, we saw the need of not only focusing on Vilnius and Lithuania, but also going out to other countries, where the need for build-to-rent product is huge, but the saturation of the market is at a very early stage. That's why we have decided to set up KAITA International, which is actually focusing on all the projects, not in Lithuania, but abroad. And KAITA Operations is a company which is running operational management of all build-to-rent portfolio, both in Lithuania and abroad. Probably the question might arise why KAITA Living and KAITA International are different in different legal units. Actually, right from the beginning, we have been focusing on separating risks of different business lines in a way so that they are not overlapping each other. KAITA Development is just development projects with their own risk profile. KAITA Living is already well-developed and well-operated portfolio of built-to-rent properties, where a track record is already for 3.5 and 4 years, where cash flow profile, the client profile is pretty much clear, and there's, I would say, very clear cash flow as well as risk profile there. While KAITA International, again, you have a development element in all of that, with building permits and the reconstruction, with renovation, and you are moving then, to a ready-made property where you are starting operations after usually 1.5 to 2 years development stage. That's why we wanted to really have a very clear risk and cash flow profile, and that's why KAITA Living is, I could say, the unit which is having or representing the lowest risk and very clear cash flow and client profile. All the sub-holdings are united by KAITA Group, and KAITA Group is naturally focusing on using synergies and consolidating certain functions as HR, as IT, as legal and financial management issues in KAITA Group services unit. KAITA Group has a board of directors, which is having an overview of all the companies, but the board is in terms of operational and executive issues deeply involved in day-to-day operations of the overall group. Talking about group in terms of how to say how the whole idea evolved, basically 4 founders of the group used to be studying at the same university and working at the same companies. At certain point in time, some of them were also active in student union activities, which created a lot of focus on younger audience right from the beginning. And after a certain while, the idea of setting up own company was formulated, and roughly 10 years ago, a company was set up and operation started from first development projects, which have evolved over time. And later on, roughly after 4 years of operations, I have joined the board of the group as a CFO. Each member of the board has more than 10 years experience in real estate development, real estate investments, and is covering all the functions needed for further growth and operations of the group.
Okay, so I'll shortly go through the financials of the consolidated numbers and also on standalone numbers. So if looking to the trends of the financials, so we can see that the sales revenue and the gross profit is growing quite significantly. I would say that we recovered from some dip at the beginning of 24. And so now in the first 5 months, we see the trend that we are in our would say, normal numbers. So the cash flow is quite is positive, and we see also together with growing numbers also the appreciation of the asset value. So the financial situation is clearly improved this year compared to the beginning of last year. So yeah, so the trends are positive. And also the other trend is that the interest rate for the whole group and for individual companies is also decreasing. They're decreasing due to the market rates decrease. So mainly, and also some of the loans already depreciated. So now we are coming to the lower interest rate period, which also helps with a positive cash flow. So if we go to the balance sheet, which is, I think, very important because still we base all this issue on the value. And so the value of the company has increased significantly, and the capitalization rate is also pretty high, as already Mykantas presented that it's already over 30% on consolidation basis. So this due to both increase of the value of the company, also the equity part increased, and there was a slight decrease in financial debt. So also when we calculate the capitalization, so we also add the subordinated loans issued by the group company KAITA Development, which was actually the developer of the projects which are now managed under KAITA Living holding. Looking into the results of the company of the SPVs, which are pledged for the bondholders. So we can see that the trends that in all companies, both in Naujamiesčio NT and also another Plėtojimo Projektai, both the revenue is increasing. The gross profit is also growing, and so the value is also growing there. So we can see that interest and the similar charges are decreasing, giving the positive cash flow. The balance sheet now the own equity is 12 billion, and if we add also the subordinated bonds, so it's over 14 million. So the equity in this company is more than 30%. So the same with the object SPV Plėtojimo Projektai. So as you probably noticed that the sales revenue in 2024, there was quite a big decrease, but actually this was more related with the development of the project. So that our another development project of the KAITA Development was developed in the same plot. So part of the premises which were in the building converted, they were passed and sold as apartments to the market because they were not fit well into the portfolio of co-living. So the biggest part, around 1.3 million, was related with the sales of these assets. So actually the 24 represented the normalized revenue, and so 25 shows the growth. And as you saw, the main reason of the quite fast growth compared to last year was exactly that the construction works around were completed. So the occupancy rate came back to our targeted normal levels, above 90%, even more than 95%, which we think that it's our normal base. So the revenue also grew to these levels. So the market, well, the evaluators also appreciated the asset value. Of course, I believe that there is still room for the appreciation because we need to show the further stable results. But the place where we are situated, they have very good market potential, and then the prices of apartments in this area have good demand. So I think this is just overview. I think that if you have, when you look more deeply, you can have the questions. So I'll be glad to answer to the questions if there are any of them.
Yeah. Thank you, Matas. So coming back to the bonds, of course, as always, while considering investment, we encourage investors to review all the risks, and the full description of the risks is available on the information document, which is posted online on the issuer's webpage or Orion webpage. Just a quick summary, what are the main risks here? I could say that, of course, for the issuer, the main risks are related, of course, to real estate market, both regarding the prices of properties. As of now, of course, what we have already presented, there is a potential for a market increase. However, of course, if the market turns around, the value of property could go down. The same is for the rental situation and occupancy. As mentioned, now it's really high and in the target level above 95%. But of course, fluctuations happen since the whole business model is resting on the rental business. So if the occupancy goes down, the financial results would decrease as well. So I would say these are the main risks related to the issuer. Group-specific factors also, as mentioned, part of the group is in the development business as well. So I would say that construction cost, construction-related risks are also present here. And talking about bonds, so in the bonds, we have a list of usual suspects, let's call it so. So liquidity risk, the bonds will be listed on Nasdaq First North Stock Exchange. However, of course, liquidity is not guaranteed. And also specifically, we have a risk of insufficient value of collateral. As mentioned, the issue is secured with pledge of shares, so not property shares. And we have covenants which are in place to ensure a sufficient value of these shares. However, of course, if market value fluctuates, equity value fluctuates as well, so the collateral value could decrease. So, of course, as mentioned, it's a summary. A full list of risks is available, and please review it before investing. So just completing our part, going through the slides and switching quickly to the Q&A. So just to sum up what we have, as I mentioned, 2 million euro first tranche of the whole 8 million euro issue. The first tranche can be increased up to 8 million euros if there is a additional demand in the market. Placement has started this week and will continue till the 11th of July. The first date of the validity of the bonds is 15 July. Investors are being offered 11.5% annual yield, paid out semi-annually. Security, as mentioned, with a pledge of subsidiary shares. And we also have a list of covenants ensuring that the value of these shares is sufficient and that the indebtedness of the issuer as well as of the pledged subsidiaries is within a managed level. So yeah, I think we can wrap up with going through the slides and can now switch to the questions. So now just a question which I have already answered. Where can potential investors access audited financial statements? You can access it on the link which you should see in my answer. But in general, it's the webpage of the issuer, or you can also go to the webpage of orion.lt and open a dedicated sub-page, and where you will see all the information material about this issue, so meaning information document, terms and conditions, audited financials, and interim financials. Related also question, more technical one, will all communication reports and other news with investors be also in English? the investor states that other issuers are selecting to publish only in Lithuania. So I should say that in this case, since the bonds will be listed on First North, it's a dual language platform, so all the information will be published both in Lithuanian as well as in English language. Switching towards the business case questions, you mentioned that the properties are being for sale. Could you comment what is the current status of the sales procedure? So have you hired any advisors when you're planning to have this completed? Maybe what's the strategy, selling all properties, part of it, shares?
Yeah, so we are in the process of finding suitable options for us. We have contracts with two advisory companies, and one company is working with one project and another with another project. And now we are in the stage when we are getting proposals from different investors, either from Lithuania or from even not only Baltics, but even bigger players that are working with and owning bigger co-living projects in Europe. So we are in the stage when we are evaluating proposals. We are talking with our potential customers because, well, let's say it's quite a long distance. You need to go a long distance to sell the project, and well, and maybe at first it could look like a sprint, but it's more like a marathon. So we are working on that, and well, that would be the answer.
Yeah, I would probably add that in terms of the variety of interests, it's also a matter of choosing the way of organizing the exit, because the interest from local investors, local players, is also considerable. And some of them are interested in part of sections, which could still be managed as a rental unit, and there is interest from investment companies, investment funds as well as from strategic investors. It's also an exercise of finding out, down to proposals, so that we could also be able to compare all those alternatives. So it's going to take some time, but anyway, I mean, this process is moving on with the help of advisors, and we hope that within I don't know. 3 to 5 months' time, we would be able, to say, I mean, more specifically about the nature of the proposals that are on the table.
Yeah, but maybe regarding flexibility, what was indicated, one biggest property, this Naujamiesčio NT, is divided into the separate, let's call it flats or residential units. So I guess you can also simply start selling as a developer unit by unit. Yeah, so it gives you even more flexibility to sell it, and as a result collect enough cash for the redemption.
Exactly. I mean, this poses actually an opportunity of choosing the way of exiting. In some cases, there are some opportunistic players, I mean, who see different way of exiting as we do. So because we are looking at this as a rental property, while naturally at the same time there is a possibility of exiting, one by one apartments. I mean, so we will see. I mean, what proposals we are going to get, and it's going to be, an important decision to make in terms of which way of exit, to choose moving forward.
Yeah, thank you. Related question regarding business strategy. So is KAITA Living business strategy focused on managing co-living portfolio and earning cash flow, or just holding on to those projects until you sell them? So
I would be able to say that naturally we are a developer. Our biggest value added is in picking the right property in the right location, and actually developing it in a way which is helping us to show the full value, the full potential of the property. And this is the reason why we have our own operational management company, because we are not dependent on anybody else in demonstrating, what cash flow could be produced on every single specific location, not only in Lithuania, but abroad. So our dedication to the properties that we own ourselves is actually helping us to show, what's the value there, what's the potential there. So I mean, looking from that perspective, I would say that we tend to stay with the properties in the time frame of 4 to 5 years. I mean, not more, because we are not an investment fund which is able to hold the properties for 10 years, for 15 years. It's a big difference in terms of roles. At the same time, we are glad to say that the interested parties, counterparties, which are showing interest into those properties, are representing the companies which are interested in holding them for a longer period of time than we do. We are a developer which is able to demonstrate the cash flow.
Thank you. Yes, question about valuation. Is the share valuation done by independent third party or internally? If the buildings constitute the largest part of balance sheet and are consequentially pledged to the bank, share valuation then plays a critical role in determining whether there is any market value in the collateral provided. So maybe I can start answering it that the property is valued externally by independent certified real estate appraiser. In this case, it's in real. One of the well-established and high reputation real estate appraisers. The shares are not valued externally simply because we have chose to use, I would say, rather conservative view. So we say that this value of share is determined by a arithmetical step. You take the property value, which is done by external certified appraiser. You minus all the liabilities. You exclude, of course, the liabilities which are subordinated towards the bonds, and you add cash. So this is a simple and balance sheet based approach, I would say. So it's not based on any, I don't know, dividend model or income investor shareholder model. It's as simple as that. You take the value of the property certified externally plus cash minus liabilities, and that's how you get the value of the shares. So yes, it's not externally certified, but it's based on external data and checked by the trustee, which simply opens the balance sheet semi-annual basis and it does the math and checks if the value is as stated in the covenant.
I should also add that in addition to all the things you mentioned, independent status and all the how to say requirements for valuation, the valuator is also acceptable for the senior loan providers. So I mean it's also on the list of acceptable valuators for the banks which have provided senior loans to those SPVs which are a part of this bond issue.
So if we staying on the property value, a related question. On Smolensk 10, asset value in individual units is 36.5 euros. What it stands for if total value increase was quoted to be 32 million euros since land bond in 2023. So maybe could you a bit explain between these two numbers, 32 million and 36 million? Yeah.
So 32 million is the valuation which is acceptable by the audit, by the financial statements and the bank. So it is a cash flow based method. So it's a discounted cash flow method, and it was valued as revenue generating assets. So the valuation 36.5 is another alternative valuation, which normally should not be very far from valuation on cash flow based method. But this is comparative method. So the evaluators took the selling values of the similar assets in that area, and so just summed up the value of individual properties, individual apartments, and so this is actually the expected value if we would start selling it by apartments.
So yeah, and then important to note that in the books, in the balance sheet, this lower, so more conservative value is booked 32 million euros. So I think which also relates to another question. What actions are planned if real estate market value declines? Would this lead to a technical covenant breaches? So in general, of course, the situation with covenants is such that if you breach it and if you not remedy them, yes, then there is a technical default of the bond issue. But what we mentioned now, 32 millions in one of the subsidiaries is recorded as a property value. So to reach the breach level, the value of the properties has to go down by 5 million euros, so it's more than 12%. But if you include that property-based, unit-based valuation, so scenario when you sell flat by flat, you have additional 4 million euros. So if you include that, the total property value has to go down around 20%. So, which I would say, given current state of Vilnius residential market, and given the fact that this is one of the central, popular and growing residential locations, is not very likely. So yeah, that's a reply to that question related to valuation. Could you comment how is the seasonal fluctuation in the occupancy managed, and will it be different from what it used to be? Maybe I can switch to the chart, occupancy chart.
So as we can see, the results in Naujamiesčio NT in service apartments project. So if we are comparing last year to this year, we see, let's say, the same patterns. So as we can see, even in, for example, summer time, we don't have a deep dive, and there are, let's say, not so much place for fluctuations. If we are talking about plėtojimo projektai used on co-living, well, we can see that we have a huge decline, not in summer, but let's say in the beginning of last year. And then we have a growing pattern. And in the end of the year, we have reached our target occupancy rate. So that means that, well, we can't compare the project stage when the neighboring construction works were done. But talking in general regarding those two projects, we have small occupancy rate changes in Naujamiesčio NT, and there are bigger changes usually in co-living projects, especially when we are talking about summer. So now we are working on different types of contracts with our tenants. We are signing longer contracts. We are making deals for them in order to come to our project earlier. So while we are putting more efforts, let's say, in shortening the period of summer, and on the other hand, we are working on short-term rent. And this year we see the results. We see that well, our short-term model is working better and better. And well, as you can see that in plėtojimo projektai last year, even in summer, it was around 90% occupancy rate, which was quite good, including the fact that the construction works not so intensively, but also well done in that project, and that's why we can't reach the full potential. But I think that, well, it shows that this year we have all the potential to avoid any, let's say, huge dives and shorten them as much as possible. And well, if you shorten that 2 months period in the middle of summer till 1.5 or 1 month, it won't make any huge impact on total 1 year results.
I'd like to complement that in addition to the servicing tourist flows, actually we are finding out that if you look at the business case of Naujamiesčio Šventyje, which is used on apartments, in this property we have a set of corporate clients who are renting this property, for their own employees or for the potential employees whom they would like to attract to Vilnius city. And it's roughly around 18-19% of corporate rents that we have there. So that conclusion could be relevant for our other properties. So we are also looking for corporate clients who are interested in doing that in other properties. And since Lietuva Projekte has been coming to the stage where the construction which was taking place in the neighboring site has been completed, it's going to become more attractive for corporate clients. So that's for corporate part. As for the private client part, we would say that co-living and serviced apartments become a more familiar definition and notion and product for private individuals. We have noted that completely unexpected for us client groups. For example, a person doing a renovation in his own house, private house or apartment, is preferring to move to co-living instead of moving to a hotel, because co-living or serviced apartments are in a much better position to be able to offer more attractive prices as hotel market. So this is a new audience. Another thing, in cooperation with insurance companies, we have identified a completely new segment, which is individuals which have had insurance accidents in their properties. So again, instead of moving to hotels, even insurers are preferring that their clients are moving to co-living and serviced apartment properties. So fourth group is, I would say, private business people who are, let's say, relocating, from other country, coming to Lithuania to start a new business, which is also a very attractive audience for us. So at least 4 new groups identified, which are relevant for all of the properties in terms of securing highest possible occupancy rate, as well as profitability during the summer season, especially.
Thank you. So we have several finance-related questions. First is, can you explain in more details 8 million euros increase in accounts receivable? So maybe you could comment on that, especially as well as on, I guess, denominated debt, which is related.
Yeah.
Yes.
So as it was told earlier, so the new structure appeared at the end of 23 and beginning in 24. So the restructuring of reorganization of the company was that the holding was established, and so the company is transferred to different holdings. So as you know, that KAITA Development was developing or taking care of the development of these current co-living and micro apartment projects, but then they were transferred to KAITA Living Holding, and vice versa. The companies which were in the development, they were transferred to KAITA Development. So during this restructuring, the subordinate debt, in order to strengthen the capital, appeared towards the KAITA Development, and so there is a also the pledged receivable from the holding company, the mother company, which appeared due to the transfer of the shares, which were valued at market value.
So
by independent auditors.
To summarize, the development group created the property,
Yes,
sold it to the issuer, that's how the payable amount received, and when the share structure was transferred to the ultimate holding newly established, there is a receivable amount.
a receivable amount which was like transferred to KAITA Living, so that
there are both in assets and both in subordinated liability.
yes, because the value of the companies and of investments, the ultimate value, they are in the top in mother companies. So therefore, there is a receivable from other company which strengthens the position.
Okay, yeah. Next finance question: what are the DSCR figures, so debt servicing ratios, for the subsidiaries as of end of May and end of 2024?
Well, I think we'll have to answer this later because we have to look into the financial statements of each of the companies, but they are far above the requirement of the bank. So I think the Plitova project is for 5 months is somewhere towards 2. And for Naujamiesčio and Ts, it's I think 1.45 or similar.
Yeah, so but the minimum amount by the bank is at least
1.1 or 1.2 for Naujamiesčio and T case.
okay, so it's well within the range. Yeah, what is the contingency plan for refinancing the existing bonds if the proceeds from this issue do not fully cover the required amount? So maybe I can start with, as mentioned, this earliest maturity issue maturing on 1st of August, 4.5 million. 3 million is already secured from your financial partner. So only 1.5 million has to be raised from the bond, so which is quite, I would say, small amount and really manageable. And the other issue is to be refinanced in October. So that's why we have a structure that several tranches are considered. That's one point. And maybe regarding October, you could also present that there are talks, possibilities with the other private finance providers. Yes.
Actually, we wanted to start things earlier so that we would find out the market feedback regarding the bond issue quite early. At the same time, we are working with the banking institutions which are showing interest in providing senior loans, bigger senior loans than we have currently. The reason is that we already are able to demonstrate several years of track record, and our DSCR figures as well as loan to value figures are very healthy, and the interest from the biggest banks operating in Lithuania is considerable. As another alternative, locally we also are having getting obviously indications, proposals from various private investors, investment companies who are willing also to partner up with us and acquire separate sections of our biggest property, which is Smolensk 10. And in the light of all the kind of market feedback, we are also taking this into account as a potential part of a contingency plan. So basically, these are the alternatives that we are considering in addition to all what was mentioned. Of course, I mean we are also expecting some proposals from the counterparties which are showing substantial interest in acquiring the property. So that is also an alternative. That's it.
Okay. Also, a good question regarding audited financials. How reliable is the valuation of real estate, given the fact that qualified auditor's opinion was issued for year 2024? NNT and KAITA Living, so which was exactly regarding valuation. So maybe you could a bit comment. I understand it's related towards division of the assets to separate properties by unit, yeah?
No, it was not, but simply the auditors, they saw the sharp increase. So although they got both of the valuations, but they did not do the audit of the valuations, so they simply reflected that they did not do the audit of these valuations, and that they just had to rely on the valuations. And so if you see, there is a note where all the ratios which are under the valuation, which are mainly influencing the valuation, they're reflected there. So, but still, they could not issue the opinion on that, so which they reflected in their opinion. So they don't say that it's correct or not correct, but what they were confused is about the quite fast growth of the value.
Mhm. Yeah, and I think you could also check these assumptions. It's on the audit account, and I would just note that the changes, the challenges increase in revenues from previously 1.6 million to 1.7 million, occupancy rates from 94% to 95, capitalization from 6 decreasing to 5%, and discount factor from 9% to 7%. So which is really not that much significant. Of course, it all adds up.
All that adds up to the value change. So that's is reflected in the financials too.
I think this is this opinion of the auditor in some cases is also reflecting the general fact that co-living or serviced apartments is a new asset class in this part of Europe. And we have seen also that in the beginning, the valuators, appraisers were also very, very cautious, and because it was not sure, how the revenue would be developing, how NOI would be developing, and many other factors are developing. But once you have got already track record of several years and consistent performance, so this approach from valuators is not so conservative, is more, how to say, realistic. But we understand that auditors have to be more conservative. That's why they are pinpointing to the fact that the increase was taking place without saying that anything wrong was in relation to the valuation itself or its assumptions. So, I mean, it's just to draw attention, but not to say that the valuation as such is not good or relevant.
Okay, thank you. And we have a last question, technical one. Please elaborate on minimum liquidity covenant. So, minimum liquidity covenant establishes that at all times the issuer should have on its bank accounts total sum of cash at least equal to upcoming coupon payment. So, if we talk about the whole issue of 8 million euros, if 8 million euros is issued, so coupon payment is semi-annual coupon payment is 460,000 euros. So it means that at all times on the bank accounts, a total amount of 460,000 euros has to be held. So that was the last question. Thank you for a really nice online discussion. And as already mentioned, if you have any additional questions, please contact Ryan or contact the issuer directly. We will be happy to answer it. We can also organize one-on-one session. And as always, please consider this offering, make your decision. And as mentioned, you can submit the subscription orders through any bank operating on Nasdaq Baltic infrastructure till the last date of subscription, which is 11th of July. With that, I thank you and wish you a good remaining part of at least sunny in Vilnius day. Hopefully it's sunny in Riga and Tallinn as well. Thank you and goodbye.
Thank you. Thank you. Thank you.